My name is Slobodan Drvenica. I'm the head of analysis department in company Wizard Brokers, which exists in the market for over 30 years, and it's one of the pioneers in the retail forex industry, the one that we know now. Most of you who are using FX Street as your key source of information in the forex world, I do the same actually. Should know me because I'm contributor to the FX Street portal for I would say nearly 15 years. And but this is today the presentation is my first live presentation. I was until now just writing my comments and analysis. So I will join the team of top world presenters that contribute to FX Street and start doing presentation. Our today's subject will be slightly different. We are not going to talk about much about market movements and the things that are now quite interesting because the markets are very active and volatile, and this works actually in our favor. We're going to talk today about impact of the current military conflict war in Ukraine, particularly on European Union, which is the most vulnerable in this case. And we would like to see what scenarios, what could happen to European Union if this crisis escalates. In my latest speech in Limassol Forex Expo a couple of months ago, I was quite optimistic talking about end of coronavirus pandemic, one dark period, saying that this is finally behind us and we're going to start something new, something better, that we will relax from the period that we all know how it was, and we don't want this to happen again, of course. But also mentioned that highly volatile markets that were during the pandemic and caused extremely favorable market conditions to all traders will reduce their speed, their pace. They will not be as it was. The reality actually is now currently heavily against whatever I said, all my statements. So we have the extension of the crisis now in the quite different and the new dimension, but we still have a highly volatile market. So on one side it's good, on the other side it's not that favorable for us. But overall, this is the life, and we have to accept it and live it and adjust ourselves to the conditions that we currently have. I'm not a military commentator, neither political, so I'm going to focus on the economic things. I'm not going to elaborate much about the conflict that started 3 weeks ago and it doesn't show signs of ending soon. We have quite a lot of news circulating around, and they are most of the time contradicting each other, so it's a bit confusing. War itself, it's a terrible thing. I have a live war experience for 3.5 years, so I know exactly what's going on, and I know exactly how these people feel, and I know exactly the news that are circulating currently, their meaning, what are the real news, what are the fake news. I have quite good knowledge about this. So if we take a look into the flow of news, then we can hear from one side something quite positive, and from the other side something quite negative. Like yesterday there was a breaking news, I think the Financial Times was the first one to announce it, that peace talks between Russian and Ukrainian top officials were getting significant progress, and everyone was excited, like this could mean that there will be extended ceasefire at least before they start ending this conflict. There were several things that were supposed to be done before things proceed. Russia wanted Ukraine to be neutral with a very limited army, with the Ukrainian side basically agreeing with most of things. However, on the other side, we have comments today from the US President Biden and some top officials that United States is going to continue supporting Ukraine and preparing an export of a number of weapons and things, which means that this is completely offsetting the news of ceasefire and possible end of conflict that was announced just yesterday. And if we just consider that this is in a wider picture, this is a clash between United States and Russia, with all other players being just small players in this big game. If we say the bigger picture, then it's quite unlikely that things will calm down so easy. Unfortunately, I have to be pessimistic in this case, although something inside of me saying that I should not be that negative, but knowing through the history and through my own experience, the wars do not pardon, end up until one of the sides wins or gets what they wanted. So we don't have something to say very encouraging, but we have to live with the situation as it is and hope that things will start moving towards the better side. So today we are going to talk not about war, not about the reason of the war, trigger of the war, and we are going to talk mainly about consequences of the war, particularly on the European Union as the most vulnerable place and the region. So there were several tough sanctions imposed on Russia from the Western world, led by United States, including European Union, UK, Canada, Japan, Taiwan, New Zealand, and they started quite heavy sanctions from the very beginning and adding, or almost on a daily basis, adding some new restrictions to Russia, which aims to quite significantly slow the economy, if not stopping the economy. It's significant to mention that one of the three mega powers of the world, China, did not contribute into this, keeping in a way neutral position. They did not go against Russia, but they did not support directly Russia. So staying a bit aside for now. But various scenarios that are circulating are now in the field of politics, and we are not going to talk about this. Turkey also did not join the team which imposed sanctions, but benefited from this, as Turkey is now in between two sides, used as a bridge for various financial flows for goods and for people traveling. So there are very few connections now to go to Russia. One of them is through Turkey, through Istanbul. So whoever is traveling there is using these ways. So the Western world targeted the most sensitive parts of the Russian economy, targeting, of course, energy sector, which is one of the top things in the Russian economy, and the Russia basically heavily depends on the exports of their gas and oil. Also, they targeted all these industries that are related to the energy technologies and things, various goods. Russia is also a big exporter of a number of metals and other commodities, as well as food. So they were targeting the key things, trying to stop the Russian economy. Also, there were sanctions against President Putin himself and his Prime Minister Sergei Lavrov, and also the number of so-called oligarchs, prominent and big business people known in the world, which are believed to be close to President Putin. One of them is Roman Abramovich, who was the owner of a famous football club, Chelsea, who is now trying to sell this club, but the laws, the sanctions that UK imposed stop him, and he's now somewhere in Israel, what I managed to read, pardon, today, with the top officials of the Western world saying that they want to simply strangle the Russian economy, as you can see on the screen, asphyxiating or crippling the economy. So this says about the strength of the sanctions that Western powers imported to Russia. So basically whole Russia is under restrictions now. Even the things went that far, even to banning famous Russian writers from some universities. There was a case in Italy when they banned Dostoevsky. So let's just have a quick funny story about this. I read recently in the internet, in the Facebook actually, there was a question, since they banned writers, famous Russian writers, are we going to be allowed to eat a Russian salad, or this will be also under sanctions? So people try to make funny things, even in the situation when the things are not funny at all. Actually, they are terrible in both sides. So let's just see what is going on. So the sanctions first targeted the financial sector, as there are a number of big Russian banks operating mainly in Europe. One of them was Sberbank, which was completely stopped, and they banned most of Russian banks from the international payment system called SWIFT. So basically the money transactions cannot be performed nowadays with Russia, as this is stopped by banning the SWIFT. Export and imports of a number of goods from Russia to Europe were also stopped. Sanctions went to first close the airspace for Russian airplanes, and then banned the Russian airlines on landing in a number of European countries. Of course, the TV channels that are state-owned, 2 or 3 big stations, were also banned from the Western world, so you cannot see them, and also freeze the number of accounts of these oligarchs, Russian oligarchs, as well as targeting Russian President Putin and Lavrov, who were also under the sanctions, with a number of other limitations, attempting and aiming to make the life of the Russia and Russian economy as more as possible difficult, in a punishment for invading Ukraine. Of course, I said that this is a deeper problem. I'm not going to talk about this, just saying that European Union joined the Western group from the beginning, led by United States, and continued adding sanctions to its list. A couple of days ago, they agreed on the latest package, which is fourth in the list, and adding some more restrictions to the Russia. Russia was one of the most favored, actually, it was the most favored trading partner of the European Union, and this position has been cancelled. So there will not be any more having privileges in trading with European Union, and I guess vice versa, because Russians already announced that they banned certain top world politicians from entering Russia, and then they are increasing the list of the things. Of course, when you impose certain restrictions, the other side will respond this or that way. The European Union also added the luxury goods, which includes cars, worth more than 50,000 euros. I guess this is going to hit most likely Mercedes-Benz and BMW, as their number of their models are top luxury, and they're popular not just in Russia, but in Russia also very much. So if you stop imports and all services of this, is going to be a headache for Russians, but also for the European Union, because this is quite a big part of the cake of exports of European goods to Russia. So they are going to lose quite significant amounts on stopping this. And also they are working on suspending Russia's membership in the number of institutions of the world, even including the IMF and the World Bank. So they're cutting Russia off completely from monetary world, from money flows across the world, trying to completely stop it with these sanctions. Now the thing is, when you have action, you will have always a reaction. In this case, the sanctions on Russia will be having counter effects to the European economy is heavily depending on Russia, and they have quite strong economic ties. It's interesting, they are far from each other if you take it by nationality or by religious way or political ways. All views are completely different, but they're very close in economic side, and they had very good, very strong ties between the two countries, between the actually European bloc and Russia, and now this is stopped. So the energy is number one thing in all these things. I cannot minimize imports of the other things, especially steel and iron and some other metals, like titanium from Russia, which European factories heavily depend on. Pardon, but the energy is number one thing, and we need to see how this will impact the European market. It will impact definitely, but we just want to see the depth of this impact. Just a few statistics: that the European Union imported 155 billion cubic meters of natural gas from Russia. Russia is supporting European Union needs by total needs for gas by 40%, and this 45, nearly half of the imports of gas to the Union comes from Russia. So we're talking about huge chunk of this cake. Crude oil is also the very important thing, as Russia is again a number one supplier of the European Union with the crude oil. As you can see in the screen, around 4.7 million barrels Russia exports per day. Russia exports, and half of this goes to European Union. So now we are facing a quite a difficult situation if these things stop. So a quarter of European imports come from Russia, and it's transported as by pipelines, but also by oil tankers. It is interesting to say, I didn't mention it until now, as soon as these sanctions were imposed, oil and gas supplies were not stopped. There were some limitations on selling Russian oil around the world, and they faced difficulties having their oil tankers, ships stuck full with oil, but mainly in Asia, region of Asia, no one was buying due to the sanctions, although the countries did not join the sanctions, but Russia faces this problem, although Russians agreed even before the conflict started to shift majority of their exports towards China. So China is the biggest world importer of the crude oil and energy. So they will cover the damage, not fully, but in a good way. They will cover the damage from sanctions from the Western world, but Western world, particularly European Union, will be hit mainly by this. Now, the flow of gas did not stop to European Union since the sanctions were imposed. We can see this is so-called South Stream, which goes through the Black Sea to Turkey, and from Turkey it goes by pipelines into the rest of Europe. Mainly the Southeast Europe is supplied by this pipeline, while there is a Nord Stream, the one which was finished recently, goes through the Baltic Sea and comes to Germany. This pipeline actually was did not start working yet officially, and it was stopped as Germany needed to give the final approval, but sanctions came in the meantime, so the stream was stopped. So both streams, actually Northern Stream is not operational, while two others, the first one, the eldest one that goes through Ukraine, and where Russia faced a number of obstacles in the previous period, as Ukraine was blamed to be closing the pipes which were supplying, going towards Europe. So we had a couple of years ago, we had these issues several times, and it usually happens during the winter when it's cold and heating season, and people get stuck without gas. So Russia decided to make the Nord Stream to connect directly to Germany. Germany is the biggest, largest economy of the European Union, and the biggest trading partner with Russia. So they wanted to bypass all these problems and have direct supply, in addition to the South Stream, which goes through the Black Sea. Now, in this case, gas is still running, and it's also interesting to mention that Gazprom Bank, the one which is used for all payments of the gas exports that go to Europe, is still operational, is still not out of the SWIFT system. So gas is flowing, and it can be paid easily to the supplier. So from this side, we don't have a problem. But if we take a look at this diagram, and we'll see dependence on the Russian and oil and petroleum. So let's just briefly go through this to see exposure of the demand of the certain European countries. The highest user of European Union is Slovakia by 78.4%, followed by Lithuania 68.8%, Poland 67.5%, and Finland 66.8%. So we have a quite strong dependence on the oil, Russian oil. Now, do you see? I do apologize. Do you see this small window again in the presentation or not?
Yeah, I can see it.
Now?
Yeah, it's still there.
Which says FX3 admin host.
Sorry, can you repeat?
The one that says FX3 admin.
Yeah.
But why?
It's okay now. I can see the slide.
Yeah, but you can see the presentation itself.
No, but it's okay.
Okay, so let's.
The presentation is good.
If the sanctions eventually hit the supply of gas and oil, this will come back to the European Union as a boomerang, because the economy itself of the whole bloc is heavily dependent, and we can see that it's closer to the east. They are more depending on Russian gas. We have exception Scandinavian countries which are importing the processed garbage from Norway and use it for central heating. So they are not using gas, but they are depending on full import of wheat and other grains from Russia because they don't produce anything. So in one or in the other way, they will have a strong impact from the sanctions. So this is going to hurt the European Union economy. Another thing that is very important in this case, as you can see in the slide, United States, they say it, they don't want Russia to supply the Europe anymore, but they can do it. Last week, President Joe Biden said on the TV that they are capable of doing. They have enough resources in supplying European Union by energy, meaning by natural gas and crude oil. Of course, it will take time to make the new network, although it's going to be quite difficult because transporting so-called LNG gas, they cannot go through the pipeline from United States, will be using the ships. So the time of transportation will be significantly longer, and the cost, of course, will appropriately raise according to the length of the transportation and the way of transportation, because LNG gas needs certain things to be done before it's loaded in the ship. So it's more costly and longer lasting procedure. But United States are heavily pushing this scenario that they will completely take over the supplies to the European Union from Russians. In 2021, as we see, we have Russia was the third largest partner of European imports of goods, and Germany largest exporter and importer. So as I mentioned already in the presentation, Germany is number one economy in the European Union, having actually the closest ties with Russia. So in the reciprocity, the impact on the country member of the Union will be according to their level of the connections with Russia, the percentage of exports and percentage of imports. So higher exports and imports, you have more impact, more stronger impact you will face once this completely stops. And also it's important to mention, I think already, Russia and Ukraine cover 30% of global demand for grains, wheat and corn in particularly. So this is quite a big thing, and there is a strong threat if this stops, that number of people may stay hungry. I'm afraid even to say this, but this is how it sounds. And now let's take a quick look on the chart of the European gross domestic product. So we have it back from 2010, and then significant thing, pandemic 2020, when it dropped significantly. But what we see, quick recovery. Basically, European economy, except the service sector, the industrial sector, never stopped during the pandemic. On contrary, they increased the production, and this is what mainly contributed to the strong growth of the European economies, European Union economies during the period of receding pandemic and post-pandemic, when the economy recovered strongly and came well above levels that were seen before the pandemic started. So this was a quite significant recovery, economic recovery, and the latest figures were showing that things are going in the right direction, and we can expect further growth. European Central Bank also was ready to start increasing interest rates after bringing to zero, like all world central banks during the pandemic. Now this is under big question mark, because economy might slow, and just increasing interest rates in such conditions may not be appropriate if we just compare it to the period of the pandemic when the economy slowed. It will be approximately the similar situation. So the central bank of European Central Bank remained positive, but in a way cautious. They said they will view and they expect soon to start raising interest rates, but for now they are at zero. On the other side, we had the Central Bank of the United States Federal Reserve that increased the interest rates yesterday by 0.25%, and quite hawkish comments from the Central Bank's chief Jerome Powell, who said that they are in a quite aggressive path. They are looking for up to 2% increase by the end of 2022 and up to 2.8% in 2023. So there are going to be quite a big divergence between US Central Bank and European Central Bank, which again might not be in favor of European single currency euro, and could push it to the wrong direction. Also, we have something that is very important in this case, signal that came 2 days ago, release of German zoo Institute economic indicator indicating the economic sentiment in the country. If we see in past 5-6 months, the investors' moral in Germany was in the quite strong ascent. They were gaining strength, and the moral was going higher. So it means that overall sentiment of the economy was quite good and ascending. And January's data that were released 2 days ago showed that the moral just collapsed. If we see that minus 39.3 from 50 plus 54.3 previous month, it's quite significant. This is one of the leading indicators about the health of the economy, and this is initial warning signal that German economy as the largest of the European Union is usually used as a model for the others, as this is the largest and the strongest. So if you have strong impact on German economy, then you can expect also quite negative impact to the other economies of the EU bloc. Of course, smaller economies, bigger impact will be, stronger impact, negative impact in this case will be. So we have an indication that German investor sentiment is quite weak, and it's tending to weaken further. On the other side, we have a very strong inflation. This is now a global problem, but since we are talking about European Union, they have historical high of the inflation. Consumer prices are just going wild in Europe. This is due to the various factors. One of the key factors was strong pumping of the money during the pandemic, as the central banks printed a lot of money and pumped it in the economy just to keep it afloat, not to collapse. And now this comes as a side effect of this. Also, we had other things that contributed. So the situation with the inflation is not bright. European Union expects the European Central Bank, expects the high inflation to persist. United States expect it by the end of 2024. This is what they said on yesterday's central bank policy meeting. So this is a problem that will come in addition to the expected impact of the sanctions. Of course, if things go worse, in this case, if the sanctions are fully imposed, meaning that gas and the oil will be banned, imports of gas and oil will be banned. Supporting this story, we have a comment from one of the European top officials, Ursula von der Leyen, who said yesterday that the European Union is seriously counting on switching from the Russian supplies of the energy to some other sources, mentioning some of this green energy as alternative, but also she mentioned that this is going to be quite long period, and the European Union will likely having strong consequences in this period between switching from Russia, if it happens, of course, and finding alternative supplies. They have some also alternatives, imports from Algeria and things. But this doesn't look something that can make a comfortable move that will not strongly impact the European Union as a whole bloc, but it will be more painful, I would say. And the top officials say that it's going to be difficult and the prices are going to go much higher. We already have problem in the European Union with the raging prices of energy, petrol, and food. With the raising petrol prices coming out of the just fear in the market. Still, there is no significant shortage. Still, supplies are not disrupted. So we are just talking about the reaction of the market on the fears. So what if these fears materialize and the things become reality if Russia stops or European Union stops importing Russia? It could be both ways. The Russians could say one day, okay, we are stopping. We are not going to supply anymore. Or the European Union can say we are fully applying the sanctions and we are not going to import your energies. So the question is how it's going to be a reaction. In such a scenario, we can really expect bad things to happen for the economies, raging prices, high inflation, again higher than now, as most of economists agree that this is not yet the top of the inflation that was seen so far, so we can expect it even higher. So situation is not bright at all at the moment. We hope that things will stabilize as soon as possible, but again, depending on the various factors, not on us, unfortunately. And that will be all for today from me. If you have any question to raise, you can send it now so we can try to answer as quick as possible. Okay, it seems that we don't have questions. Actually, I think I gave an answers to most of things that you were likely to ask. In any case, it was a bit unusual subject, actually very, very important, but a bit unusual because most of the speakers talk about market movements. I'm going to continue with presentations next week. I'll be talking about crude oil, so you can join me in a different environment, talking about market, talking about something that we are all looking for, and we are very interested in this, and crude oil is my favorite instrument for trading. And you will learn more, of course, if you join the next my next presentation, which will be next Thursday, and it will be announced by FX Street. Thank you very much for your attention today, and hope to see you soon. Goodbye.